Hello and welcome as we are finished the first week of September. It's the sixth day, year 2019. My name is Derek. This is the Money Charts channel. Welcome all bets, trades of the like within each his own risk and their own reward. What the short answer, the short answer here is, regardless of how the market starts on Sunday night, I'm not going to trust its move, whether it goes up or it goes down. And we're going to be all weekend. I guess you can take a look at this failed breakout that occurred earlier today at about 8 o'clock in the morning. I did a video at 9 o'clock, and it established this high at a key Fibonacci point, and then it gave over about 110% retracement, 108%, meaning it pierced below the lows that it made in here, and it closed at the lower end of the range where it started breaking out from. Usually when you have this exact pattern, that's very bearish, and I realize there's a good chance that the lows are not in at these levels, and we're going to be making more from the high. As I mentioned prior, I didn't feel the lows were in here. And then when you seen it leaving the 18 and breaking down in this in here, it figured it was going to come down to another leg lower. It did. But when its first rally didn't stop going up in this general area where the lower high resistance should, then it was making a statement of, okay, we're in a bull market primarily over the daily term, that this thing could get pretty interesting. And of course, it didn't hold it. And that's why when I mentioned before, okay, really needs every time you have a move like this, it really needs to hold a significantly higher low, but it can go deep, which would have meant like around 1830. Well, it didn't do that. And again, it gave back more than 100% retracement. So in situations like this, let's just assume you're trying to bet on the market to go up or down. And in a case like this, maybe you're looking for a short-term short position. Very easily in a bearish run, this thing could go up and run into the about 18 and a half, even 18 and change, 1850s. I really think it'd have a hard time getting above 1860 though. And that's like what I mentioned. If it happens to rally a 1-2% from here, getting up to again around 1860ish ballpark, it's going to be hard for me to trust it with what's been going on in here. I do realize that every time there's a good setup, which is what this is showing, if it doesn't happen, you can have a fast, explosive move in the primary direction. And because the trend of this market on the daily chart is that of significantly higher, well, that would mean another correctionary test in here, leaving the 18 well above that number I just mentioned, but 1871, 1878, 1880. Well, now we're back into this bull market. It'd be excitation of the 18 average of highs in a bull market. And amongst extreme volatility, if that's to be the case, at least a lot higher than what has been going down. So if you see it getting in and above this level of resistance, this thing is going to be going haywire along the way. And like I said, I don't. It's good. I'll trust the rallies when I see it getting above it, but until it gets, it can show me that it can hold and stay above 18 and 1860. Then no, not right yet. But at the same point, I don't trust the sell-offs when we have the daily chart amongst this. We have the 3-day chart in this area here. And the 18 average, it tells me I can go down even more. Well, let's go to the monthly, is the one I'm looking to go to. Now, in this situation here, I was very pleased by how the market didn't break down after having this failed breakout. So again, I'm looking at a good setup here on a bullish side, because after within this decline to have this move to this high, do this several a dozens, well, two to three dozen periods within it, a couple dozen maybe, whatever. To have this many amount of periods not break down, and breaking down means having a significant leg lower than the last one, and the last one was about 13 and 3/5. It matched it with the pierce above in here for about 3 or 4 quarters, but 1 year in time through at 2018. But that was the best it did on the bearish side. So the bulls held on within this correctionary phase from this move. And the statement in here tells me that I should be trusting the pullbacks along the way. So the 18 average here is rising, and I wouldn't be surprised if it does have a pullback to 1677, and I think there'd be a good chance there in that area, of course, 16 and a half, in the 16s, and that it does hold it. But I also wouldn't be surprised if the lows are near and we don't even see anything close to this, maybe even again. And this thing does go off, and next thing you know, maybe we do start off on Sunday, and this thing just goes much higher. We do get above this 1878, 1882. Whether that happens at 6:30 p.m., 8 p.m., 8 a.m., or 3 o'clock on Wednesday, most likely on 3 o'clock Wednesday, then there's probably going to be a lot of good reason to say, okay, this thing is live. This thing is probably, its next test is previous high, but it's probably going to take it out. And of course, to me, that would mean a correctionary test. And I've already removed my lines here, which is fine. But a correctionary test of around 20 and change as its next level. All right then. So there really isn't much more to say here. We have gold showing the same thing, having a move. And anytime you have this nice little move where you get above the 18 like this, and you just can't hold, and it's a fast correction to the lows like this. You see it hanging in there like we do sort of here at previous lows and this type of stuff. I really have a hard time feeling that it's. I mean, that's to me, it's a super bearish pattern. Actually, you know what? There's one thing I wanted to show as well, but I also want to show the gold to silver ratio. So I'm going to go to gold to silver ratio next, and we can see the this on a bullish level as gold to silver ratio going higher favors gold and lower favors silver over each other. And within silver's move, of course, more volatile, so it's going to act as it did. So even though gold went down and up the same way, it just meant that it didn't go up and down anywhere near the percentile terms that the price of silver did. On the daily chart, after significant red moves down, the correctionary move. Significant red down moves, well, it has started day number one of its correctionary move. So what I want to do is I actually want to take the price of silver and just show the invert of it. So I'm going to do 1 divided by this. And there's the opposite. Okay. So we look at this quickly amongst the multiple time frames. First, going back to the failed breakout earlier, we can see in this case it's that failed breakdown. As you're able to have this high, beautiful rally in this case, come back down and go down below the 18. You resist the highs, come back close to the lows, and next period you take it out precipitously or very aggressively, noticeably, and then you now show strength at the 18 average of highs. Well, that's a bullish pattern, just like, of course, why it would be the opposite. And then if we just quickly look at some other ones, like the 8 hour, well, it's been in a major downtrend, and it's now trying to be able to take it out, and it's going to be very hard for me to trust this rally. Thus, why it'd be hard for me to trust the sell-off. Okay, yeah, maybe this can go up further in a bearish level, which you get opposite types of stuff, but maybe come up and find a lower high somewhere amongst this area. Because when you have a move like that, I do not expect there's a good chance of it making a matching or a higher high. And I also realized that when you're in a downtrend, a lot of these moves can have a bunch of good fake rallies along the way. And thus, the opposite of that is the fake sell offs as well. On the daily chart for this way, we can see just the same thing as far as this, but as far as the monthly chart is concerned, we look at it from this perspective in here. Unfortunately, the other chart that I have doesn't work when I do 1 divided by it, but Within this here, I can see you have this high, you have this low, and that's just a tremendous rally on this point of view so far, both bullishly and bearishly, because it managed to get above and stay and hold above this level of resistance for a significant period of time. But as far as filling empty space from this low to this high, so far it still has only come up to there. And within that, what has happened just when we look at this from the key high? Well, we've managed to fill just a small amount of this empty space from this low now. And you come back to the 18 average of highs, support exactly where you'd want to, where you came from at the lows. Then you have this little bit of a rally attempt, but you can see how over this period it's been able to maintain itself within the 18. And this is something I don't see too often in here. These few periods there. That's showing strength at and completely below the 18 average of highs. So 4 periods where it closes there, it never gets above it, at least not by much, and probably hardly ever for that much time at all. But it always closed within that area. It's always curious to know what percentage of the time it was priced at a certain level. But still, we have that breakout. This was this big breakout attempt, big statement. You have this high that you have, you establish level of support, this long, enduring correctionary phase. That if this rally attempt fails, that's not good news because it wasn't able to get above, but it pretty much matched this high. At this point here, okay, you break it, you find support, you'd be supporting this level of resistance. And then this little break it in here, but it just fails like that. That's a major scare. Of course, that's on a short point of view, it would be a major scare. And the situation of breaking down below here, well, that's like breaking above $50. And then if we look at the gold one in the exact opposite, yeah, that's what we're going to get. Just so I can get a number on there, I'm just going to put a bunch of random numbers in. So now we got an index, and I want another one just because the number's not big enough. So I could just say, hey, this is the short index. It used to be worth 60, and then it was worth 8. Then it was worth 14 and a half, now worth 10. And after this move in here, having two attempts to resume the trend from this high in December 2015, not doing it, having several support tests at around 11, well, this case we'll say 1122. Why not? And that Pierce above in this situation, but just a really low volatile, not such a great move on the rally side, but big red candle down, big red candle down. The pause month in here, which uh, if you're short this, or if you're long this rather, you'd be like, it's concerning. Anyway, thank you for tuning in. Have yourself a great day. Bye bye.